welcome to episode 10 of the Core Basics curriculum. In this episode, I'm going to be going over risk management when it comes to your trades. Risk management, it's in the name. You're managing how much you can lose or how much you're willing to lose. Okay? Now, risk management is a very simple thing. There's multiple ways you can calculate your risk, how much you want to risk, basically just your risk in general. You can calculate your risk in over, I don't know how many ways, probably over 5 ways you can calculate your risk. You can calculate it by win rate, risk to reward, and a crazy amount of other things, okay? But the way I do my trades, or the way I manage my risk, is I have a fixed risk. Since I'm profitable, I use a risk of 5% or 10% of my account, okay? I risk 5 to 10% of my account. 5 just on a normal day, on a regular trading day. But if the setup is looking A plus, like really, really juicy, I'll, up it up to 10. But I'm not going any further than 10, okay? So 10 to 5% is how much I risk per trade. That's just something you can do. You can do it based off of a fixed amount of percentage, which is what I do. Now, there are things called live accounts and funded accounts, which I probably never even introduced to you. But funded accounts, there's rules to them. You probably heard of funded accounts before, but there's rules to them. So with my strategy, you can't risk 5%, can you? No, you can't, because there's a risk of blowing your account. You're blowing your funded account. So I use a live account. I do have a 700K live account, and I risk 5%, 5 to 10%, based off how the trade is looking. Okay, on a regular day, the trade's, executable, but it's not perfect. I'll risk 5%. But if it's an A plus trade, a nice, solid, juicy looking trade, I'll risk 10%. Okay, you can also base it off your RR too. There's multiple ways you can do it. But based off what you're comfortable of doing, or your win rate, for example, let's say your win rate is 80%, right? Let's just type in 80%. 80% win rate. That's your win rate, right? If you have an 80% win rate, and let's say you risk 10%, like 10% per trade. You won't go any lower or any higher than that. 10%, for example. 10% per trade risking. Okay? You're risking 10% per trade. So, let's say you took a trade here, right? Let's say right around here, this very right, and your stop was right there. And your take profit was when the displacement ended, which was around here. You'll learn about displacement and other concepts soon. But you're risking 10%, right? That's what your stop is. Your stop is 10% of your account, okay? But the risk to reward is 3. So that means if this hits take profit, you gain 30%, in which it did. It did hit take profit. So you're risking 10% in order to get 30% back if this hits take profit, right? You have an 80% win rate. So what does that mean? You have a 20% chance of losing and an 80% chance of winning, okay? So out of 5 trades, you lose 1. Okay? That's what that is. Out of 5 trades, you lose 1. Simple enough, right? Out of 5 trades, divide that by 80%, you lose 1. Simple, right? So, let's say you lose about, I don't know, let's say you lose all of them. Well, not all of them. Let's say you lose 3 of them, okay? And let's say your average RR is 3. Your average RR is 3. RR 3, okay? Your average RR is 3, correct? Your win rate is 80 and you're risking 10% per trade. Let's say you lost 3 trades. 3 trades lost. Wow. You won 2 trades. Okay? So, if you're risking 10% per trade, right, which is your stop loss, your stop loss is 10% and your take profit is 30%, okay, or whatever your RR is going to be. Your average RR is 3, your win rate is 80, you're risking 10% per trade, fixed. You're not changing it. It's a fixed value. You lost 3 trades, and you won 2, okay? So, like I said, the RR can vary, okay? It can vary. But you don't want to base your stop loss, or you don't want to base your risk off of your RR. Do not do that, okay? Do not do that. Or don't base your RR off of your win rate, okay? or don't base your risk off of your win rate. Don't do that either. Because I'll tell you one thing. You probably heard of journaling before. You probably heard of journaling. People say, "Oh, journal, please journal to help you out your trading journey." Yes, it will. But do you need it? I'm telling you this from experience. Do you need it? Do you think you need it? Do you think you have to journal your mistakes to do better? Do you think you would have to do that? Like you personally, do you think you would have to do that? You said yes, then hey, that's your opinion. You think you might have to do it. But guess what? I didn't. Out of my 2 years of trading, matter of fact, it hasn't even been 2 years yet. In about 2 weeks from now of posting this video, that's when it's officially 2 years. It's been like a year and 3/4 now. But from my 2 years, I guess you could say, of trading, I've never journaled a single time in my life of trading. Never journaled once. Not once at all. And I'm profitable. I've proved it. I'm profitable. And you don't need to journal. You don't have to, okay? Once you understand the concepts I'm going to teach you after this curriculum, and you really understand them, and just keep training and 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 training. And once you notice, it's like for me, I noticed once I was profitable. I noticed, I was like, oh wait, this is easy. You will get it in your head. In your head, you'll be like, oh, this is easy. I can do this with no problem. It's not like you don't have that fear of biting your nails and are just afraid to take a trade that you might lose. No. You don't have to do that. Once you notice your profitability, you will notice it. You will notice that it will click in an instant. It will click immediately. Once you notice it's like, oh wow, this is easy. I get it now. This is easy. Easy, easy, easy. Taking trade left and right, left and right, left and right. Probably lose a trade every once in a while, but still, you're noticing your profitability. But the next step is then taking it to a live account or a funded account and doing it yourself. That's the challenge. So, back to the example here, right? Let's say your trade was 3RR, right? Let's say you took 5 of these trades. Like we said, you took 5 of them. 2 of them won, 3 of them lost, okay? They were each 3RR. Got it? So, and you're risking 10% per trade. Let's erase the win rate because you don't really need that. If you do some math here, okay? If you do math, if we won 2 trades, right? That means we made 60%. Okay? And if we lost 3, that means we lost how much? Do the calculation in your head. It's simple. If our stop loss is 10% of our account, and we got stopped out 3 times, how much did we lose? We lost 30%. Simple, right? And if we won 2 trades, right, with a fixed RR of 3, okay, how much did we make on these 2 trades? If you said 60%, you're correct. So we lost 30 and made 60. The difference between those, are we in profit or are we in the negatives? Are we in the positives or negatives? You said positive, yes. Yes, okay. Simple. So, your RR, what I'm telling you is your RR has to always be bigger than your stop. Has to be. Or it can even be a 1 RR, but do not have it like this. That's just stupid. Have it to at least 1 or 2. Okay, now, this may sound a little controversial, but don't have it at a fixed RR, okay? Don't. I know from the way I'm saying it, in my experience, it may sound a little weird to you now, but once you see how I trade and the way I do it, it'll look different. Because when you understand the concept and you know you understand it, and I teach you everything you need to know, you won't have to worry about any of this. This just won't be needed. You can just clear all this and this won't be needed. You can hop into the market, place a trade, and it'll hit immediately. You don't need all that. You don't need all that win rate, that RR, and all that, okay? All you can have is once you master the concepts and you've proven to yourself that you can do it, you can jump in the market and look at charts with no problem and place a trade and it hits take profit. Okay? Most of the time. We're not going to give you a percentage, like some sort of win rate. We're not going to do that because I don't do that. I don't have a win rate. I just jump in the market, okay? May sound weird, but I just jump in the market. I don't have a win rate because I don't journal. I don't know my win rate. I can probably say my win rate's probably like 90 or 80. I can just say that, but in reality, I don't know. Because what do? I've mastered ICT concepts as a whole, and I just jump in the market. I know what I know. I can place a trade, and trade will hit take profit immediately. It's very, very simple. So when it comes to placing your trades. The strategy will give you your RR by itself. Because the way I trade, I'm teaching you the way I trade and how I do it, okay? You can have a fixed or a specific risk, okay? Let's say you risk, I don't know how much. Let's do what I do. I risk 5% per trade. I risk, oh, trader, 5% per trade. That's how much I risk, okay? I don't have anything else, and I have these other statistics like win rate, RR. Do I need to have a specific RR? No. No, 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 no. All I need to have is just this. Because what I'm going to teach you to do is I'm going to teach you to master the concepts. All that other stuff I said earlier, the win rate and all that, you don't need it. Okay? If you've gotten this far in the video, you do not need it. All I'm trying to give you is something that you're comfortable with. I want to give you a percentage, or I want you to determine a percentage for yourself. And do not be greedy. Do not. Do not be greedy. Okay? Do not. Because if you're greedy, what that leads to, or what that tells us, if you're doing stupid things as in being greedy, what that tells us is you don't have enough trust in your strategy to where your strategy will give you a good amount of profit that satisfies you. Okay? So, I personally say if you risk about 10% per trade, just off a regular trade, don't do that. I personally say don't do that. On a live account, of course, on a live account. We're just saying live accounts, okay? Because you're probably going to start off with a live account and probably won't go into funded later. Or you'll probably start off with funded and then go to live accounts. But when it comes to live accounts, what I do is I risk 5% per trade. And I trust my strategy, or I trust ICT Concepts to give me a good RR because I've mastered the concepts and I know how to use them. I've grasped the understanding of the concepts, okay? So you can have a fixed win rate, okay? Not win rate, but fixed risk. I risk 5%. Okay, I did catch this trade on gold. Had my stop just right there, and I had my take profit. I forgot. I have no clue where, but I did draw standard deviation. We can see. Just let me do my things real quick. My thingly things. Yep, I targeted the first standard deviation, which was down here, and boom. You probably have no clue what standard deviation is, but don't drive yourself crazy. You don't need to know what it is. Don't drive yourself crazy. You'll be just fine. Don't drive yourself crazy. You'll be all right. So I targeted here, and it gave me 3 RR. Okay, so you do how much you risk times your RR. So 5% times 3 is what? Is 15%. So, and it hit take profit. So that means I made 15%. If I would have lost this, or if it would have hit take profit, I would have lost 5% because that's my fixed win rate. Or the trade's looking real juicy or real good, I'll risk 10% per trade. Per A plus trade. No. We're going to say per A plus trade. Okay? I keep saying trade. I don't know why I keep doing that. But 5% per trade on a regular day. But if the trade is looking real nice, real good, I'll risk 10. Okay? And the reason I'm saying this, but you're probably like in the back of your head, don't you need a win rate or certain statistics? Oh my god, statistics! Jesus Christ, statistics to have certain things and make sure your trade's gonna go right? No, you don't, because what I'm gonna teach you is after this curriculum, I'm gonna have a mentorship that will go through every single concept you need to master ICT concept. And once you master it, I will teach you to trust yourself, okay? Because once you know that you have the grasp of the concept and you have it in your hand and you're just grasping it and you know that you have it and nothing can pull you away from it, it's over with then. Then you're profitable. You don't need all this journaling. You don't need all that. You don't. You don't. I'm telling you this from experience. You don't need all that journaling stuff, man. You don't. You don't need to see all your win rate, your average RR. No. You don't need to see it. All you need to do is have a fixed risk percentage and a trust in ICT concepts, a knowing that you grasp these concepts, a knowing that you can hop in the market and provide yourself a trade or provide yourself some cash through the market. Okay? Very, very simple. It's nothing hard at all. It's going to take some time. I'll give you about a year. From this point on, I'll give you about a year to master ICT concepts and to really trust yourself. Just keep going on demo and 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 demo on demo on demo accounts. And once you see that you're profitable over like probably three months, I'll say 3 months. If you're profitable for 3 months, yeah, or over 3 months, you're in the green. Yeah, I think that's when you're profitable. 3 months of profitability or 3 months of green when it comes to demo, I think that's good. And you see that you're doing it and you have the confidence where you can just jump on the market, look for a trade, and not be scared at all, that's when you know you're ready. That's when you know you're ready. That's when you know you can hop on live, have a fixed risk amount, not too stupid, not 20%. I'll say anything above 10 is kind of stupid per trade. Okay? You can have anything below 10. That's what I'll tell you. Anything below 10 is a good risk amount, okay? Anything below 10 or anything less than or equal to 10, I think that's good. I think anything above that will be pretty stupid to have on just a regular risk percentage. So, like I said, all you need is just 1% or one little percentage number to risk at a fixed amount. And then once you know that you can hop into markets and trade like it's nothing, like you own these markets, then yeah, it's over with. Then you know your confidence. Then you know that you don't need all this win rate and all this other stuff. All you need is a fixed risk amount and a grasping of ICT concepts. That's all you need. That's all you need. Really all you need. Because that's what I did. Once I knew that I had this in the bag, I was like, okay, this is easy. This is easy. This is easy. This is easy. This is nothing. This is easy. Okay? And I'll tell you one thing. It is okay to have fear in the beginning. Because fear in the beginning will tell you that you are not ready. Okay? It's okay to have fear. I'm telling you this now. It is okay to have fear because that tells you you are not ready. You'll know you when you're ready. Am I wrong? Probably not. Probably so. I don't know. But you will know when you're ready. You will know. You will know when you're ready. Most definitely. You will feel it. You'll be like, okay, this is easy. I can do this. You'll feel it. But I hope this is a pretty good lecture. Honestly, I didn't really give you a lot about risk management because you don't need a lot of stuff for risk management. All you need to do is just have confidence in yourself and have a fixed risk amount because that's what I do. And I'm profitable. So, enough of me yapping or enough of me blabbering. I'll be in this episode here and I'll see you guys in the next episode. Peace.